United Health is up over 9% after hours, and the stock is trading at $300. Now, a couple of days ago, we talked about how this was sitting at our smart money zone, and we posted on X that we thought there was a very good chance that this was the bottom. And because of that, we were going to end up taking a position. So back here on 8/11, 9:38 a.m., I alerted my private Discord community that I was buying 400 shares of UNH at an average of $256.26. And you can see right here that we are already up without this after hours move, 12.46% or $12,700. Now, more importantly, what is most of this news actually coming off of? Well, what ended up breaking today is that David Tepper's Appaloosa LP ended up buying or increasing their position from, I believe, 1.13% up to about 12%, which is a 13x on UNH, now up to 2.4 million shares. Berkshire's Buffett ended up buying, as most of you probably know, about 1.57 billion, which is 5 million shares. This is the first time that they have bought since 2010, and Michael Burry is currently holding $115 million in UNH stocks and calls. Now, the reason that we were entering this position is because price had finally pulled back into our smart money zone. And the irony here, or at least I should say the coincidence, is that our smart money zone is exactly where smart money billionaires were buying. If you want to learn how to draw these zones and get access to my exact trading system that has made me over $5 million in the past 4 years with a 59% win rate, you can do that by taking our free masterclass trading series down in the description. There are 11 courses completely free in sequential order showing you my exact trading system. The Smart Money Mastery course will show you where exactly to draw and find those institutional and smart money zones. Now, the reason that this is a smart money zone is because there's an 80% sell off from low to high, meaning that whatever stock that institutions are looking to buy, they want to get a deep discount. They are not going to overpay for anything. A great example of this have been a couple of trades that we've been focusing on, like AMD. AMD pulled into our smart money zone and has now bounced 100%. Another good example was Robinhood. Pulled into our smart money zone, broke out 270%. Roblox pulled into our smart money zone, broke out 160%. A couple of trades that I'm still holding and still having profits on, like Reddit, SoundHound, and NCLH, all pulled into our smart money zone and broke out. Now, of course, this doesn't always have to happen. But as we said before, the reason that this is such an important zone is because institutions are not going to overpay. They want to get invested into very, very strong companies at ridiculous discounts. And that's why when we have a stock like UNH trading at a smart money zone, it is a very good sign that price is going to bounce. And I want you to understand like how patient we truly have been with UNH. Back here on April 21st, when everyone was trying to buy the dip, we were saying that this was not a good time to be buying. Why? Well, at the time, price was trading at $427, which is nowhere near our smart money level. This was still trading at a premium when people were trying to buy the dip at this support. Now that price has sold off, literally from $600 all the way down to $243, in my opinion, this was more than worth taking a position. Now, the question becomes at this point, is it too late to enter UNH? And two, do I think that this is truly the bottom, or are we going to sell off one more time? Now, to answer that first question, I do not think it is too late to buy UNH if you are somebody who has a long-term outlook. If you're expecting this thing to recover back up to $500 within the next couple of weeks, I do not think that that's going to happen. If you're somebody who is looking to get call options for the next month, I don't think it's a good idea. But if you're looking to park capital somewhere, once again, not financial advice, for the next 6 to 12 months, I think there's a very good chance you can make 50, 60, maybe 70% return on your money. Now, as far as short term, something that we teach within our trading system, which once again is free, is the volume profile. And more importantly, the point of control. So the point of control is this red line here on your chart that goes off of the volume profile. So the volume profile are these horizontal bars over here to the right side of your screen. These are very important because these are going to show us not how many shares were traded, but where exactly these shares have been bought and sold over the past year and a half. And the major area of buying and selling is seated right here at $300. Now, these act as very strong supports and resistances. So there is a chance that price comes right back up, traps a bunch of retail investors here at $300, and then sells off one more time. And I would not be surprised if that ended up happening. But since I have a price range down here in the 240s, I'm just going to continue to hold because if we're able to actually break through this thick area of volume on the volume profile, it will be very easy for us to move to 400, very easy to move to 450, and pretty easy to move to 500, which means that if we can sweep this resistance, this thing could go parabolic. So if I'm going to take any profits tomorrow, it's max going to be like 10% to 20% of my position, and I'm just going to continue to hold the rest of my UNH position. Because I do think that over the next 6 to 12 months, there's a very, very good chance this is trading back of $480 to $500.